Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement, presented by Chris McIntire, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your game plan for retirement with Northwestern Ohio's resource for that common sense approach to planning for the complex financial investment and retirement decisions that we all face in order to make that confident financial progress. He is president and founder of McIntire Retirement Services. Chris McIntire here with us. Chris, first show of 2023, looking back at the year that was, looking forward at the year that we hope this one turns into. A lot of money and financial discussions and debates and a lot going on financially. So welcome into 2023. Hope it's a good year for you. Hope you had a good holidays. It's great to see you again, my friend.
Yep, it's always a busy time trying to get to the holiday season. We had a major winter storm come through in our area, threw everything into upheaval. So, kind of nice to have some of that behind us. And, you look forward to the holidays getting here. You look forward to them, kind of exiting and then getting on with a normal routine, I guess, getting back into the work swing of it, if you will.
Yeah, and January and February a little bit seemed to me to be kind of the slower months of the year where we've got some time to sort of reflect and get things done. And I know that the new year is always a good time to reflect on progress and review and then formulate the plans. So you're here to help and assist. Do want to remind you, ladies and gentlemen, if you've got questions, concerns, if you would like to review your game plan for retirement or get that plan put together, pick up the phone, give Chris McIntire a call, 800-868-1194. That's 800-868-1194, 800-868-1194. But Chris, we'll talk about what opportunities we have in the year to come, what risks and issues we may face, some of the silver linings. But I am hearing a lot of chatter right now that 2023 might be another challenging year for the economy. I'm hearing a whole lot of the R word, recession. What are your kind of thoughts, predictions, forecasts on that?
Sure. It's going to be a challenging year. Obviously, the rising interest rates that they did so suddenly in 2022, are afflicting economic, let's call it damage for lack of a better word, to slow the economy down, to slow the price increases or the inflation threat. And, did they go too far? Have they not gone far enough? That's where we're going to find that tug of war anyway.
Yeah. And I know that, Chris, whether or not we have a banner year in the market or a more challenging, difficult year in the market, having that plan in place is sort of what gives us the guidance, the guardrails to help us to continue to make some progress and know if we are striving toward benchmarks and milestones. And that's really what you help your clients to put in place is having that plan that, again, regardless of the conditions of the stock market and the economy, can allow us to still make that progress that we're aiming for.
Yeah, absolutely. There's always going to be some opportunities in there, and some of it's going to be, maybe you change the investment strategy, get a little more aggressive if the market starts to take off. We're hoping we'll get some bond market recovery here as they slow or even, eventually stop the interest rate increases. That'll be better off for the bond market, which really hurt conservative investors into 2022, pretty significantly. And, as we've talked about on the show for many years here, Peter, is that, if as long as you hang on to your bonds, they mature and you get your principal back. If your statement reflects what you would get if you sold them on the day your statement was printed. So it can look different than what the reality truly is. With stocks have to recover for you to get your money back. Bonds mature and you get your money back. So that's the difference there. But when they raised rates as significantly and as fast as they did, it was a shock to the bond market in 2022. No question about it.
Indeed, indeed. And Chris, the statement from Jerome Powell from the December meeting was that they planned on continuing with interest rate increases throughout 2023. So while they have slowed the amount or pace, not quite as big of an increase, those continued increases may still put some pressure yet to come on the bond market.
Yeah, no question about it. We're not saying that this threat is over of increased bond market volatility. It should ease up. But the nice thing about owning in bonds is that as they mature, you're going to buy new ones at a higher rate of return. So, if you just ride it through this interest rate cycle, to the degree that you can, you should be buying future higher rates of return, and it might look bad on the 31st of every month, but then as they ease up on the rate cycle increase, and as you go forward, your bond returns, the interest or the coupon payments, however you want to, whatever terminology you're used to hearing, are going to increase. No question about it. That's just a fact. So, sometimes you gotta, work against your emotional logic, I guess.
Well, there are some silver linings here. And yes, the increasing interest rates of 2022 and what is forecast for 2023 have created some challenges, but there are, again, some opportunities and some benefits and silver linings. Chris, Social Security payments will rise by the highest amount in decades. Medicare premiums will decline next year. So a little bit of extra monthly cash flow for seniors and even those who have yet to claim and collect Social Security get the benefit of that increase. And then we are seeing more opportunities for reasonable interest rates on things with less risk than we have really seen for about the past decade. And I know you talk with a lot of risk-adverse investors that is appealing for.
Yeah, absolutely. And, we have done a number of different safe money alternatives throughout, my working career. And we've had, several opportunities to take advantage of that, when the market's up, carving off some gains, when they raise the interest rates, using some different instruments as against the traditional 60-40 portfolio, 60% stocks, 40% bonds, looking at what are the other alternatives that are out there. There's more than just Wall Street, obviously. And, I think that's part of our niche in the marketplace, Peter, is the ability to, use maybe what we would call non-traditional investment pieces, as opposed, other things other than that stock bond relationship.
Well, again, there are options and alternatives out there. Ladies and gentlemen, you have to define your goals, your purpose with each dollar, and then evaluate what options are available to help you achieve those important goals. And that is part of the game plan for retirement, written retirement income planning process. And if you would like to review and evaluate the risks that you're taking, the fees that you're paying, the taxes that you may be liable for, the investment options that are within your portfolio, how to maximize Social Security and get the most out of it, as well as identify those risks, issues, and opportunities, pick up the phone, give Chris McIntire a call, 800-868-1194. That's 800-868-1194. I know a lot of resolutions get made, financial in nature for many of them, Chris. So now is the time of year, ladies and gentlemen, to jump on that to make sure that you follow through and get that plan in place. Again, Chris, some silver linings. This one a little bit tongue and cheek, because I think that the cause of this is not so much of a silver lining. This is the gray cloud rainstorm, but RMDs for seniors will be lower this year, but that's because of the market and the account balances being lower, correct?
Yeah, you're absolutely right. So to determine what your required minimum distribution is going to be in the year ahead, they look at the December 31st value. And for most folks, those values are going to be less than what they were in December 31st of 2021. So in some cases, significantly lower, 5 or 10, maybe 15% lower. And you also had a distribution that may have come out of there as well to satisfy the Internal Revenue Service. So if you were 73 years old, you had a distribution that came out in 2022, Plus, if you're invested in the stock market, the investments went down most likely. And you took a distribution out. So your distribution for 2023 could be, significantly less.
Well, again, we have to understand all of these implications. And the government does understand that we need to be doing more in our efforts to save for and build up those retirement accounts. So, along with inflation adjustments on many things, they are increasing the limits for how much we can save and contribute to our retirement accounts. Chris, this is a great opportunity for people to catch up or max out and juice up those retirement accounts into 2023 and beyond.
Sure. Yeah. Anything helps to allow people to put more money away. They say we have a retirement savings crisis. So making opportunities that have some tax advantages for people to give them the incentive to even save more is certainly a win-win. And for a lot of folks out there that have money come out of their paycheck every pay period and go into investments, it's a great strategy. So, in 2022, obviously the markets were very disappointing, but as you were putting more money into the stock market, you were buying more shares at lower prices. So you'll eventually see higher rates of return on those as well, because, maybe you bought Amazon stock in part of your investment portfolio, when it was down close to 40 to 50% in 2022. And, I think most of us would agree that's a pretty big sell-off for Amazon, and, perhaps they'll recover. But again, a lot of the technology companies, Google, Facebook, a lot of those technology-driven companies really took a hit in 2022 compared to, say, a Walmart, for example, or the energy company. So there are parts of the stock market that would certainly have some opportunity to recover what they lost in 2022 going forward. And, if we only knew when that was going to be, right?
Right. Hindsight being 2020 in the investing world. It's always easy to look back, but we make decisions based on the information that we have at the time, not with that historical benefit perspective. So, Chris, we've got to have the plan in place that allows us to make that progress and evaluate the options, the tools that we have available, and then make the best use of them. And again, for 2023, ladies and gentlemen, some additional opportunity there, contribution limits on your 401ks, your IRAs, your SEPs, your Simples, and many other retirement savings opportunities are increasing for the year. And in order to make the most of those and make wise decisions, give a call to Chris McIntire at McIntire Retirement Services to discuss your options, review your choices, and how you are utilizing those opportunities. 800-868-1194. That's 800-868-1194. Chris, mentioning the higher interest rates, the risk-adverse investors, you've got a lot of clients that you deal with at McIntire Retirement Services that are making the transition into retirement or are already retired, and formulating that written retirement income plan, the preservation and decumulation, as it's been called, making income withdrawals a big deal, a big transition, which again, these higher interest rates may benefit people currently undergoing that transition or already in retirement.
No question about it, Peter. And that's part of that bond market discussion we had previously, is that, hey, we're buying future higher rates of return. We've done, lots of multi-year guarantee annuities, MIGAs, we call them in our industry, where we're, 3 to 5.5% interest rates on short-term dollars. And, I know some of you are seeing advertisements in the paper for CD rates up and coming, for money market accounts, coming up, thankfully, but I guess if we want to measure that is, if inflation is at 7% and they're paying us 3%, that's the same thing as them paying us nothing when the interest rates were 4%,
Yeah. Yeah, we do have to consider kind of the overall environment, but I think, as we look at the amount of cash flow that we can generate from our retirement accounts, and then how much risk we have to take in order to generate it, Chris, this is maybe an advantageous environment, a good market, a good place to be considering making that transition. I know, this, again, time of year, we set a lot of financial goals. And looking back at the year that was 2020, I think a lot of people are kind of reviewing and assessing their portfolio and saying, maybe I'm not as comfortable taking the risks that I once took. Maybe I don't want to see as much volatility in my retirement accounts, if we're even opening our statements, Chris.
Yeah, that's for sure. It's every once in a while you have one of those years where it isn't fun to look at. But again, you have to remember that your statement is just a moment of time if you wanted to sell that day. Through 2022, it just was pretty progressively beat down. But, you have to remember you missed some of the best days, and that's a big impact on your long-term investment results. So you look at like a month of October after September sell-off. If you sold in September and missed October, you're never going to make up for that. So it's sometimes it's about the time you spend in the market, what you're doing with those dividends and interest that you earn. Are you reinvesting them in having a strategy versus I got nervous and jumped out?
Well, Chris, a couple of the fundamental common financial goals: saving more, spending less, sticking to a budget, better growth, making sure that we are doing what we need to fund retirement. Are these kind of basic steps things that you can help with there at McIntire Retirement Services?
Yeah, they certainly are. We do comprehensive wealth management. We help people with tax planning. We help them assist them getting their estate planning done. So, sometimes we start off, we do one step at a time, and then we work our way, into the next step. And that could be long-term care planning, Roth IRA conversions, tax planning, the estate planning, helping them get their wills and trusts and powers of attorney and all those things. And, not everybody needs everything, that's why, everybody's got individual goals and individual risk tolerances. So, we take all that into consideration. It's not a one size fits all, whatsoever. We're not an asset gathering firm. We are, an independent fiduciary. We get a lot of support from some of our wealth management partners at Brookstone Capital Management, and then also represent a lot of the independent insurance companies that are out there that we have the ability to utilize also.
You mentioned advanced tax planning, and I have heard and seen where this is a particular aspect in planning that those with a little bit higher net worth, more affluence, say they want, but by and large, the financial modeling that is being done and the traditional approach to planning sort of ignores this important fact. Chris, could you dive into that tax planning side and what that means and who ultimately could benefit? Because I think everybody would like to pay a little less in tax.
Correct. Or pay the right amount of tax going forward. And, so like, for example, in 2022, if you were married filing jointly, the 12% tax bracket stopped at, let's just round it to $84,000. Okay. But you also got about a $26,000 standard deduction. So, all right, off of 84,000, you'd subtract 26,000. And boy, you got a lot of room in there to be taxed at the 12% tax bracket. The next tax bracket is 22%. Okay. So why would you not want to max out that 12% tax bracket? So one example of what we do is, for people that need income is, look, let's get you up here and max out the 12% tax bracket. For other folks, it might be Roth conversions. They don't need any more money, but let's take some money out of the IRA at 12% and put it into the Roth that eventually you can withdraw, or even your beneficiaries can, at 0% taxes.
Planning ahead, ladies and gentlemen. It's not what you make, it's what you get to keep. It's not what you have in your retirement accounts. It's what you get to spend out of it. And taxes, well, that's the biggest expense standing in between. And if you are looking for more proactive guidance, there are a lot of different tax opportunities and strategies out there to better control, to minimize, in some cases, to eliminate unnecessary taxes from taking more of your money. And if you'd like to take a look and make sure that you are identifying them and utilizing them where they could be advantageous, that is part of the written retirement income plan, the game plan for retirement that you can get only there at McIntire Retirement Services with the help and assistance of Chris McIntire. Pick up the phone, give a call. No cost, no obligation for a quick phone call, questions, answers, discussion, and to sit down for that complimentary review and strategy session to design your game plan for retirement. 800-868-1194. That's 800-868-1194. 800-868-1194. Now, great conversation so far on the program, Chris, but getting back to making sure we make progress, you have a fantastic checklist, the 2023 Financial and Retirement Planning Checklist. I think that this is a resource that really everybody should get in their hands to make sure that they are addressing the items that need to be addressed, from an investment, an income, a tax, a healthcare, and a legacy perspective. 5 big subjects, sections on this checklist, and many items go in it, but a great reminder of the things that we need to be addressing throughout the year to come.
Yeah, absolutely. And, we're happy to provide it to you. If you want to give Heidi a call at the office, we can email it out to you as well. But just a number of different things to start, prepping yourself for. Peter, I'm going to let you start. Let's go with number 1.
Yeah. Well, income and budgeting and expenses, Chris, I think it's something that while we are maybe lucky or hardworking or blessed enough to earn a comfortable paycheck standard of living, what a lot of us forget is that the shift for those same people when we voluntarily walk away from the paycheck is that much more dramatic. So in order to have confidence moving into retirement, we've got to spend some time and attention really focusing on that subject that maybe we've let go a little more loosely during our income and paycheck earning years. And that's a part of the base process for planning for retirement, is the budgeting, the expenses, the income planning that gets overlooked during our working career.
Yeah, no question about it. And, a New Year's resolution might be to, better watch where all the money's going, right? In an inflationary environment, pay attention to where your dollars are going makes perfect sense to everybody.
So calculate how much of your pre-retirement income you will need to replace in retirement, check pensions and social securities, calculate how much of your net income you will need your investments to create throughout retirement, calculate if personal savings is capable of producing the cash flow rate you'll need to withdraw, include inflation and loss of income streams in income projections, map out your written retirement income plan. That's just section 1 on this 2023 financial and retirement planning checklist under income and expenses. Several items to go through. And if you would like this checklist to go over on your own time, or maybe with a spouse, loved one, family member, a coworker who's been considering retirement, pick up the phone, give Chris McIntire and McIntire Retirement Services a call. Heidi in the office can email this out to you or send it out to you. 800-868-1194. That's 800-868-1194. Chris, of particular interest, I think, moving through last year and into this year, investment analysis, section number 2. There's a lot that goes into investment analysis, actually understanding those investments we have in our portfolio that I think a lot of us tend to put out of sight, out of mind. Some routine things like rebalancing and maxing out and assessing risk tolerance versus actual risk exposure. All of these are, again, processes of that game plan for retirement planning strategy session.
Yes. And, and understanding what's the cost of the investments that you have. Exchange traded funds are very low cost, very transparent vehicles, very liquid. Nothing against mutual funds, but they can cost a little bit more at times. And is it worth paying that extra cost? Variable annuities can be very expensive out there as well. So knowing what you have and what does it cost to own them, is certainly in the client's best interest and also in the advisor's best interest as well. So a good win-win there to get some transparency and some better understanding on what does it cost to have your money parked where it's parked?
Yep. And section 3 is taxes. We've already spent some time on taxes, but calculating out, forecasting out what those taxes look like this year is a little different than preparing for future years and making sure that we minimize that. And one of them is, in fact, much more effective. And yet that's the one that far less people actually participate in. Tax forecasting, planning, and being proactive, ladies and gentlemen, can help you keep more of your money than preparing the documents based on last year. So I know this is the time of year where we start thinking about filing taxes, but let's start shifting that paradigm and thinking about planning for taxes is the big push here, and the reminder with this 2023 financial and retirement planning checklist. Chris, a couple more sections here: healthcare and insurance. I know this is a big push for you there at McIntire Retirement Services. There's maybe no perfect solution for healthcare costs and expenses, but we all have to at least have thought this through, addressed it, and formulated our plan, right?
Yeah, absolutely. And, healthcare, Robin and I, $2,000 a month, basically, for healthcare. When you're retired, even and you're on Medicare, they're taking out, call it $170 a month from your Social Security, for Medicare Part B. Then you're buying your supplement. What else isn't covered? And that could be another $150 a month. You might have a prescription drug benefit. That's another $100 a month. And then if you're married, times that by 2, so, it is really a significant expense. And, God forbid you spend some time in a nursing home or a rehab type facility where you have a lot more out of pocket expenses, because a lot of that stuff is not Medicare paid for. They might pay for 20 days, the first 20 days of your rehab, and then you got to go into pocket. But if you've got a dementia or an Alzheimer's type situation, and you're looking at 1 to 3 years, for example, you're talking potentially hundreds of thousands of dollars. And what is the best way to leverage that? Is it, can you offset that risk at a minimal cost? Or, nobody wants to end up in a nursing home, but, I'm here to tell you, you can go in any of them that are around the area. None of those people want to be in there, but most of those beds are full.
Mm. Well, we've got to address that in our planning, Chris. We've got to be proactive to protect ourselves, our loved ones, to do the best things for our lifestyle, our comfort and confidence, and of course, our finances. And that is the gist and the point, ladies and gentlemen, of the 2023 financial and retirement planning checklist. Give a call, request it, get it in your hands, go over these items. Last section is key events and milestones. These are specific dates and ages or events that you need to make sure that you are paying attention to take advantage of every opportunity that you have along the way. And there are some opportunities that we will certainly see into 2023. There's maybe some surprises as well, but that plan is what's going to give you confidence moving to and throughout the year. So give a call, talk with Chris, get your game plan for retirement put together. 800-868-1194. That's 800-868-1194. 800-868-1194. And Chris, it's been many, many wonderful years working with you on the radio, reminding proactive savers and investors of the important aspects of planning, talking about a lot of great details on certain subjects each and every week. But the real value of the program, I continue to believe and want to remind you, ladies and gentlemen, is the ability to apply this information, to speak with Chris personally and put the pen to paper and put your plan together. If you would like that complimentary review, that retirement planning strategy session, pick up the phone, give a call. 800-868-1194. That's 800-868-1194. But Chris, again, always a pleasure, sir. Thank you for the constant reminder of doing what is important and valuable for our financial future. Thank you for being the resource that you are.
Hey, my pleasure, Peter. Good to be with you. Thanks, everybody. Be safe out there. Stay warm.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.